Hey guys, thanks for watching. In this video, I'm going to outline which time frame is best for you and what combinations of time frame you should be using. So I will be going onto the charts briefly, but I've drawn this table to explain how I look at things. And the time frame really depends on you and the lifestyle you want. If you're the kind of person that wants constant action, you like the thrill of being in a trade, perhaps try out scalping. And it really depends on what time frame you like, and you really have to backtest to see what you like. For example, if you like going on the 1 minute chart, then you have to place those trades with the bias on the 5 minute chart. So I always use the concept of temperature and climate. So in that case, the temperature will be 1 minute, but the bigger picture, the climate, will be the 5 minute chart. So if you're in the 5 minute chart and the 5 minute is quite bearish, likely to go down, you're more likely to enter a short position with a 1 minute entry to fine tune your entry. And you would be classified as a scalper or a day trader. If you want some more action and you like the thrill of constantly being on a trade, but at the same time don't want to be as intense as the 1 minute, 5 minute combination, then the temperature or the smaller time frame in this case would be the 5 minute chart, and you use the price action on the 15 minute or 1 hour chart as the bias. So if on the 1 hour chart it's looking quite bullish, you'll be more long biased when entering on the 5 minute chart to really fine tune your entry, and you would still be considered somewhat of a scalper and a day trader as well. Me personally, I'm in the last category. I decided that, okay, I tried scalping for a couple of months and I really liked it, but I just found that, I want to be able to do other things in my day, like going to the gym. I don't like to stare at the charts personally more than 2 or 3 hours a day. And I like placing more 3 or 4 trades in a week, or potentially 5 at the most, and really catch the big swings. But at the same time, catching those big swings requires a lot more patience. And you have to learn how to leave it for a while, and it's not for everybody, to be honest. And it does require a bit more, I would say, understanding of market structure, because very often scalpers would use signals. Sometimes they would use certain indicators to facilitate early entries. But with swing trading, it's a bit more complicated than that. You have to really know when to hold. It's a fine balance between holding it long enough, but at the same time knowing when to take profits. And a lot of that does come with time and experience. But in that case, you would use the climate as the 4 hour. So that would be your bigger bias. So if the 4 hour looks quite bearish, then you would be more short biased. So I would personally use a 50-minute time frame to refine my entry to get a nice tight stop loss for a good risk reward ratio trade. And you can even fine tune it further with the 5-minute entry. And another tool you can use for these things is Fibonacci. In this video, actually, I outline how to use Fibonacci tools, and you can use Fibonacci as part of your strategy if you want to actually use that for entering trades. And in this case, if you're in the last category, I would say you're more of a swing intraday trader. And above that, if you're using the daily to weekly charts, you would be more considered an investor as opposed to a trader. Using this chart, for example, I'm going to go on the 4 hour chart, for example, swing trading. I want to look at the general bias, and you can see clearly in this Bitcoin chart, it is more of a downtrend, but just purely looking at it, you can see there's a series of lower highs, and you can use a zigzag indicator, which is shown here, zigzag Lucem A and B 7522, and if you do that, it shows the actual peak, so you can clearly see this lower high, lower high, lower high, lower high, and if you can see that, you can see, okay, so there's a general path to the downside instead of to the upside. Perhaps you might draw a box, and perhaps you might draw Fibonacci and fine tune your entry for a short. So this is more my style of trading. So I will see there's a downtrend, and I might draw Fibonacci from this peak to this peak. So this is more my style of trading, and I will first of all look at the general trend, which is to the downside, and I would draw Fibonacci from the recent high, local high here, as you can see with this, and this is a recent local low, and you can see there's an interaction here at the 786 and 886, and then I might draw a box here and fine tune my entry for a short position to get a really good risk reward ratio trade. And I would always enter on the 15-minute, 5-minute time frame, and that is if if it's a trending market and we're going to the downside. The way I trade in a sideways market is a bit different. But on the other hand, you might decide, okay, the 4-hour, 50-minute combination, you want a bit more action than that. So you might go to the 1 hour. And if you look at this case, you can see in the 4 hour, we're actually on a downtrend. But if you go on the 1 hour, you can actually see the trend is actually a bit different. You can see that actually we've broken structure here. We've pushed up and taken out this local high and pushed down. So who knows, the next move might be a higher high. And so in this case, you might want to enter in the 5-minute chart. And using the same process I did there, you can perhaps just zoom into the 5-minute and enter with the trend. So in this case, if you're using the 1 hour, you would enter mostly in the 5-15-minute combination and just really fine tune your entry and get a nice tight stop loss. And of course, you would use other confluences like, for example, volume profile or MACD, RSI, stochastics, whatever indicator you like. But it's the same principle. And you can do the same thing with 5-minute. If you go in the 5-minute chart in the same example, so on the 5-minute, you can see that we're actually in a downtrend. And you might think, okay, I want to enter on the 1-minute. Something to consider is that if you're on the 1-minute chart, what actually happens in the 1 hour chart is actually not as important to you. As going back to this table, you're more interested more in the 5-minute and 15-minute chart as your climate. If you're in the 5-minute, 15-minute chart, I found personally the 1 hour and 4 hour are important. And very often I find the 1 hour and 4 hour is often linked. But in this case, obviously you had a 4 hour, which was on the downside. But then you had a 1 hour that was recently on the upside. So me personally as a swing trader, more intraday swing trader, I would prefer to use the 4 hour bias. Of course, I would look at the 1 hour as well, but for me, the 4 hour has more weight, and I will fine tune my entry using the 5-15-minute time frame. But at the end of the day, it all depends on you, and I would recommend trying both out. What I found is that I tried scalping for 3 months, and I did really well, but it just wasn't me. For me, I'm more of a swing trader, and so I stuck to that. But really see what suits you. I find sometimes you could be the kind of trader where everything is fine. You can't actually see anything wrong with your trading style and you're playing really high probability setups. But sometimes you might just be a scalper who's actually a swing trader, or you might be a swing trader who's really a born scalper. So you need to really test out what suits you and back test it, perhaps journal it and see, am I better in this time frame or am I better in that time frame? Do I want to always be at the charts? Do I always like the thrill of being the charts? Do I feel bad when I'm not looking at the charts? Or, okay, I want to look at the couple of charts for a couple of hours in a day or a week. And I want to place few trades, but big swings. So really see what suits you. But yes, guys, thanks a lot for watching. Do check out my channel. I've put down Fibonacci video here as well. And this can work hand in hand, actually. And do check out my other videos. But the Fibonacci tool can work hand in hand with really deciding what time frame you want to use and just really fine-tune your entries. But yes, thanks a lot, guys, and I'll catch you in a bit.